Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. The first quarter has ended, and that means that investors are going to get answers to what did the start of 2023 look like for a lot of public companies. One that I think is going to be really interesting to watch is Zillow. This is obviously a company that has exposure to the housing market, but it's gotten out of the house flipping or iBuying business. That's started to impact the financials. It didn't have any houses on the balance sheet at the end of 2022. But now we're getting to the point where the rubber meets the road as far as the company operating profitably long term. So what do we want to look for as investors? I have 4 questions that I want to ask of Zillow and that I'm going to be looking at when earnings are released. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content and turn on notifications so you know when a new video comes out. So the first question to look at with Zillow is really around the housing market. This is a company that has more data than almost any other player in the housing industry. So are we starting to see any sort of recovery, at least in the volumes of homes being sold? One of the challenges in the housing market is when interest rates rise as fast as they did in 2022, it means that getting a mortgage is that much more expensive. So unless home prices come down, which is really something that's tough for people to swallow, unless they have to sell a home for a certain reason, then the housing market just kind of freezes up. And I think that's exactly what we're seeing. That's what we've seen from the volumes late in 2022 and early in 2023. But what does that look like for Zillow's business? Because Zillow isn't directly selling homes, but it is essentially an advertising platform for the agents who are making those sales. So if those agents aren't making money, they're not going to be advertising on Zillow. That means Zillow's revenue and margins go down. And it's just kind of a bad trend for Zillow. So what can the company tell us about the recovery in the housing market? That's going to be the real big key and the macro key for Zillow when earnings are released. We also know that Zillow is now losing money. There are a number of reasons for that, but the macro reason is exactly what I talked about earlier, and that's the housing market. As the housing market has slowed down, the revenue that Zillow is bringing in has come down, and that's led to financial losses. There are also investments the company has made in some growth areas like mortgages, and that hasn't really paid off so far. So how long will the company be able to absorb those losses or be willing to absorb those losses to take market share? I think that's really the game right now is they would like to take market share so that when the housing market recovers, they're able to have a bigger business at the end of the day. But this is one of those times where management really needs to prepare investors for what that looks like. They did show a chart in the last earnings report that showed that they weren't affected nearly as much as some other house platforms. So maybe they could be taking market share. And I think that would be a positive trend for Zillow. But they need to give us an idea of, is there more cost cuts coming that are going to get the company closer to profitability? Are we just going to weather this storm and lose money for a short period of time until the housing market recovers, maybe 2, 3, 4 years from now? That's really a big question that management is going to have to answer. Related to those growth products, what is the future of the mortgage business? I think this is one of those businesses that seems to make a lot of sense for Zillow. You're providing services in finding homes and finding agents for a lot of home buyers, but the mortgage business has not been nearly as successful as I think a lot of us would have thought, and it's just been burning cash. The question right now is what kind of services like this, whether it's mortgages or title, what belongs under the Zillow umbrella? And maybe the answer is that this business isn't as big as we maybe thought it was a couple of years ago. And the opportunity is really just as a platform to connect people within the ecosystem. That's okay. Zillow can be a great advertising platform. But the question is, what are they going to do with something like the mortgage business? And if they're going to go all in on a product like that, I think they need to answer, when is it going to be profitable and what does that look like? And the final thing, Zillow's balance sheet actually looks really good. There's about $3.4 billion in cash and $1.7 billion in debt. But what does the company do with that? We know that it's bought back a little bit of stock, but does management want to pay off that debt when it comes due over the next couple of years, or maybe even pay it off a little bit early? Are they just going to hang on to that cash, trying to weather the current storm in the housing industry? How aggressive do they want to be with this cash that they have sitting there? That's something that I'm really looking for an answer for, because a lot of technology companies right now are sitting on cash, but they're burning money at the same time. So what do you do in that situation? Are you trying to get to free cash flow positive on your operating side of your business? Or are you trying to do something like acquire competitors or grow your business in another way or return money to shareholders by buying back stock? I think we'll get an indication of what that looks like for Zillow, but what management says about what they're going to do with that cash and how they're going to grow the business, I think is going to be equally important. So those are the big 4 questions that I have for Zillow. This is a company that I've ridden all the way down. I thought the iBuying business was going to be a good business. I was completely wrong about that. But at the core, Zillow's app and the advertising services and the value that it's adding to the housing market should be a big and valuable business long term. That's why I continue to hold the stock. We just need to see when the business is going to start to turn around. And maybe the answer really comes down to when the housing market turns around. We don't know exactly when that's going to be quite yet. But look for some clues and some hints from Zillow's management. What questions do you have for Zillow from the first quarter? I'd love to hear your comments in the comments section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody. I'll see you here next time.